What is going on, everybody? Thanks for clicking on this video. If you're watching this, in this video I'm going to be going over pretty much the basis and the idea behind the current entry model that I trade with the team every single morning, and what I look for and why I believe and consider it to be a high probability setup, and how you can find it for yourself as well. In the end of this video, I'm also going to be going over a couple of psychology tips. This video should be fairly short, around 10 minutes, so make sure you stick to the end so you can actually learn something new. I'm going to be breaking this down. This is how I was able to get 3 winning weeks in January out of 4, and the fourth one I lost by like half a RR just because I traded 2 days of the week. But yeah, I won 3 weeks back to back in January, positive month, and we are on track to win February as well. So let me show you kind of a step-by-step breakdown of the entry model, but mainly focusing in on today's entry and the general idea behind the entry model. If you want an actual detailed step-by-step breakdown though of the entry model and a PDF guide checklist to go along with it, make sure you check the link in the description of this video right now. And then once you fill that out, I'll go ahead and email you the PDF checklist, and you'll be able to watch my step-by-step video breaking down my strategy. It's only like 13 minutes long. And yeah, let's get right into it. So pretty much the overall strategy, if you look at the market from the higher time frame, always starting at the 4-hour, you will notice that the 4-hour at the 10 a.m., so the first 4-hour candle after New York market open, is usually when the move of the day happens. Okay, so for example, today I'll be breaking down the exact trade, but today this was the 4-hour candle. So once you start looking at the market in 4-hour candles, you start to understand it a lot more. Like before, I used to be super zoomed in and tunnel vision into the smaller time frames, not really understanding what's going on in the higher time frames. And then I would get stopped out, and then it would go in my direction, but I just wouldn't know why. So I'm going to show you why that's probably happening to you, how you can fix that. And also in the link in the description, y'all can also trade live with me and the team for free for 7 days. Watch us trade live in the morning calls every single day, and talk to us, ask us whatever you want, and also access everything we have to offer for free for 7 days. So make sure you check the link in the description. But enough yapping, let's get right into it. So you want to be looking at the 4-hour, okay? 4-hour, the main ones you want to look at if you're trading in the morning session in New York is the 10 a.m. 4-hour, 10 a.m. New York time 4-hour, which ends at 2 p.m. And then the opening at 2 p.m. is where another power move happens, which is obviously the 2 p.m. till 6 p.m. candle, and that is when the last 2 hours of the New York market has a power move as well. But usually I trade in the morning because I don't want to be looking at the charts all day, so I'll look at the 10 a.m. one. Okay, so if, for example, this was today's, as you can see, a big move, and for example, if we look at the one from the other day, big move as well. These candles just have the most volume and give you the best entries in the market. Now, this is pretty obvious. Obviously, if you're trading at 10 a.m., the big moves are going to happen. Why are we looking at this big, ugly candle? Now, what are candles made up of? They have the body, and then they have the wicks. When we anticipate a move to the upside, usually these candles are going to have a wick on the bottom, right? Let's say we're anticipating a move to the upside. Why would we anticipate a move to the upside? That's the first step. We need to anticipate where is price most likely to be headed to. So before we have this 4-hour candle, if we're looking right here on the right side, price is sitting right here. Where is price most likely headed to? So we're on the 4-hour. We draw this huge displacement leg up as a fair value gap on the 4-hour. As you can see, we actually respect it. We fill it completely, and then we end up closing above it, which is super bullish. Okay, we end up closing above it. Now we're also trending up on the 4-hour. In general, the market has been in this dump, recover. So we're still recovering. And on the 4-hour, we're trending up. We're making higher lows and higher highs. So what do we want to see the market do next? This is the most likely place where price is going to go next. Okay, because price goes from internal to external liquidity and from external to internal liquidity. So what did we do here? First, the market took out internal liquidity here, this 4-hour gap. We respected it again. Now, the market took out external right here, right? After that, what do? We take out internal liquidity again. Since we're still uptrending, we completely respect this gap. We fill it up completely. We rebalance the market. Now what are we doing? Targeting external liquidity, which is sitting up here. So the drop for the day was this high. Next step. Now that we know where the high is for the next 4-hour candle, what do we want to do? We want to find the best entry. So how do we find the best entry? We want to find a manipulation leg and catch the distribution leg, the birth of the distribution leg. So how do we do this? Acknowledge first that the 4-hour candle, before having the move up, is most likely going to have a wick down. So once we zoom into the hourly, for example, we zoom into the hourly, we have this hourly fair value gap that gets displaced through. We inverse it. Now, since we have this hourly fair value gap that we're inversing, I want to see, is price going to tap into it for a retest and then continue pushing up? Because I want to always deliver off of an hourly or 15-minute fair value gap if possible. If I'm delivering off of an hourly fair value gap, I'm going to be looking for an entry on the 5-minute usually, okay? 5-minute for my final entry, which is usually going to be a change in the state of delivery or a break of structure. So go down to the 5-minute. 5-minute. All right. So we have a 4-hour gap. Price is most likely going to retrace into it. We know that. Now let's remove the 4-hour gap. It's too big. It's really big. We have this 1 hour that we just inverse. It's smaller, but it gives us a good idea. We also know that we're in a bullish area here from previous, the 4-hour. So what do we want to see? Mark out 10 a.m. This is 10 a.m. right here. At 10 a.m., if you can envision this as well. You see the 10 a.m. opens right here. This is going to be the wick, the bottom wick of the 10 a.m. candle. This is the manipulation. We take out sell side from 9:30 right here. Boom. Take out sell side. Then we distribute higher. Okay? Distribute higher. So I want to see this become a manipulation leg. How can we confirm it's a manipulation leg and not a reversal or just a continuation down? Confirm this with confluences, obviously. So we know where price is headed to. Now we want to actually figure out how are we going to get there and how are we going to get on that horse without falling off, aka getting stopped out or just entering properly. So we don't want to enter yet, even though we know price is most likely headed up, because we know there is most likely a manipulation leg coming before the distribution leg. So I'm waiting for two things mainly. So the first thing I'm waiting for is some form of inverse fair value gap in my direction. So what do I mean by this? On the 5-minute, obviously we don't have one. But if we zoom out to the 2-minute, this shows me that bulls are starting to take over bears. We're starting to get ready to flip to the upside once again. So here we have a 2-minute bearish fair value gap. We end up closing above it on the 2-minute. Now, second step for an actual entry. Oh, my bad. Second step for an actual entry is a change in the state or break of structure. This is a little bonus tip I'm giving you on this video. But still, make sure you go to the link in the description so you can get everything set up for yourself and even join our free Discord, okay? So, change in the state, break of structure. Where do we get it? We finally get the inverse fair value gap. Now we're looking for the change in state, break of structure. Go on the 5-minute because we're delivering off of a 1-hour fair value gap. What do we get? Technically, a break of structure would be way up here or here, but since that's so far, I'm going for a change in the state of delivery, and it just makes sense in this market, because if we end up closing above this level, this previous fake out leg that we would have confirmed to be a higher low, right? So we put in a lower low, we finally start getting a higher low, and then if this completes closing above here, then we confirm that this was a higher high. Okay, so I'm waiting for the change in the state, which basically I just need a candle closure above the body of this candle that birthed the last leg down. As you can see, I keep moving this gap. As you can see, we get it right here, retest, entry. I'm putting my stops below the last, the manipulation leg down, that low. That way I'm protected as much as possible, because we already manipulated down and took out lows. So I don't see why the market, if we are going to go to these highs first, why we would keep manipulating down and taking out more lows, because we already took out. Okay, and now we're starting to displace to the upside. So I enter in right here after this 5-minute closes. Now the most unfortunate turn of events today, I'm not gonna lie, we still won the trade. We hit a 1-to-1, trimmed contracts at 1-to-1, but we could have hit full TP by a tick, bro. So what ended up happening was, once we hit a 1-to-1 up here, I trimmed my contracts. We hit the significant high. I trimmed my contracts and moved my stops to break even. And guess what happened? We got stopped out barely before continuing to our final TP, which was up here, which was these previous highs. So, you know, it happens. Just one of those days. Depends how you manage your risk. In the long run, I know this will work for me because it has been working, but it just sucks when you have those days where you get stopped out before full TP. It is what it is. I'd rather have this rule in place for myself rather than not move my stops and then end up getting stopped out. Because usually when we have this happen where you hit a 1-to-1 on your move from the first break of structure and it goes back down, it typically doesn't stop and it keeps running down. So just one of those days, the lower percentage of these days that happen. But hey, you just got to deal with it and keep going. Tomorrow is a new day. But hey, still a winning day, still a beautiful trade setup. Pretty much everything was 8+. We even had 5-minute SMT at lows. I talk about that more in the video, in the link in the description. So make sure you sign up for that. Now, one last tip I'll give y'all. If y'all are still struggling with trading, this kind of changed everything for me and why I'm starting to scale my accounts. I only trade once per day, okay? Only take one trade per day. And that's pretty much it. If you're taking multiple trades a day, your mindset's going to be off. You're not going to be trading as good as you can on the second trade. Or maybe you just don't really care about trading. You should be acting like a sniper. Look for your entries as if you were a sniper. Only take one shot per day. Once you're done, just get out, step off the charts. If you're going to be looking at the charts, just make sure you're back testing your one sniper entry, but not scalping the whole day unless you're a professional scalper. But if you're not, none of this is financial advice. I'm not a financial advisor, but if you're not a professional scalper, then why not just find one quality snipe per day? That usually happens right at market open, and then call it a day. You know, you don't got to be on the chart for more than 2 hours. So that's pretty much it. If you guys do want to trade live with me and my team every single day and see us trade this model every single day as well, go ahead and check the link in the description. You can trade live with us for 7 days for free and join the free Discord and see everything we have to offer and see how everybody's running it up. We just had a member start this week and pass a funded account. He's already up like $600 on the funded. So yeah, I'll see y'all in the next one. I hope you guys enjoyed this video. And for my free members watching this, thanks for watching this as well. If you're already in the Discord, I'll see y'all in the next one. Comment any questions if you have, okay?